You're syncing up and tuning in to the Lending Link podcast, powered by GDS Link, where the modern day lender can dive deeper into the future of data, decisioning, and credit risk solutions. Welcome to the show, everyone. I'm your host, Rich Alterman, and today we're syncing up with Jonathan Gurwitz, credit lead focused on the go-to-market strategy for Plaid's credit products, where he has worked for almost 2 years. Plaid, founded in 2013, is headquartered in San Francisco and provides a technology platform that enables applications to connect with the user's bank account and other financial data, powering fintech and digital financial products. Plaid currently operates in the US, Canada, the UK, and Europe, with plans for further global expansion. Their developer-friendly platform currently connects to over 12,000 financial institutions and powers over 8,000 digital finance apps and services. Prior to joining Plaid, Jonathan led partnerships for Credit Karma, personal loans business, and helped build consumer credit products at Vero Bank. Jonathan holds an MBA from Stanford University and a BA from Dartmouth College. In this episode, Jonathan and I will touch on key trends related to open banking and the use of bank transaction data to augment lenders' risk management and so much more. But before we dive into the interview, please head over to our LinkedIn and Twitter pages at GDS Link, that's GDSLINK, and hit those like and follow buttons. If you have not done so already, please subscribe to our podcast on Apple Podcasts, Spotify, or wherever you prefer to listen to your podcast. All right, now let's get synced with GDS Link. Welcome, Jonathan. I hope you're having a great week so far, and thanks for participating in the podcast today. So where are you joining us from today?
I'm joining from Boston. So I actually grew up about an hour west of Boston in Worcester, but I've only been back in Massachusetts for the past 2 years or so. So I spent the prior 12 years split between New York City and the Bay Area.
Okay. Where exactly in Boston are you?
I'm in Jamaica Plain. So it's a relatively residential area on the outskirts of Boston, but accessible to kind of downtown in the city, the airport, et cetera.
Well, Boston's certainly one of my favorite cities. I graduated from Boston University in 1982 and then worked for Bank of Boston from 1985 to 88. And I understand that you're a really big Celtics and New England Patriots fan. How have they done this past season?
Yeah, it's really a tale of two teams. So past season, kind of the Celtics made the Eastern Conference Finals, another strong season for the team. I obviously would have wanted to see them win a championship. I'm excited about the new season that's kicking off. They've got an updated roster, and I'm feeling good about the season. I think the Patriots are candidly pretty hard to watch right now. It's about as bad as I've seen the team over the course of my life so far.
Right.
We've had an amazing run. We've dominated the AFC East really as long as I can remember, but the post-Brady era has not been going well. The trend line seems negative, but I guess what I'd say is, taking a step back, I'm pretty spoiled as a Boston sports fan. We've seen a ton of championships in my life so far, and I think on balance, there's no better place to be a sports fan.
So have you had a chance to attend a lot of the Celtics games?
I've attended a few. I will say, with the team being really good, ticket prices are insanely expensive. It's really wild. So, effectively nosebleed tickets, you're looking at pretty high prices, regular season games. So it's really easy for me to get there, but it's an expensive one.
Just like the green associated with the Celtics shamrock, I'm going to make you green with envy, because when I worked for Bank of Boston, my friend had 5 seats on the parquet floor. And this was during Larry Bird, Danny Ainge. I was there for the finals. Had friends calling me from Ohio. How'd you get those tickets? Because I sat right where the players would come onto the floor. So it was pretty incredible.
That's amazing. I'm jealous. I need to get Plaid to consider some corporate seats there.
There you go. Okay, good. Well, yeah, let's thanks for sharing that. So let's get a little bit personal before we kind of step into the meat of today's session. Before joining Plaid, you were with Credit Karma and Vero Bank. Maybe can you share how some of the work you did at those firms led you to a decision to join Plaid?
Yeah, absolutely. Perhaps starting one step back, I started my career in finance, doing investment banking and growth equity investing. I saw there a huge opportunity in fintech. We met with a ton of companies, got to spend a lot of time in the sector. And really my takeaway there was that the quality of the digital user experience in other industries, like online retail or booking travel online, had improved so much, but financial services remained behind. Again, there was a ton of opportunity. And I also saw this exciting ecosystem of companies forming, many of whom are Plaid customers. So the Venmos of the world, the Robinhoods of the world, the SoFis of the world. So, at that point, after having kind of spent time in the investing world, I decided I wanted to actually join one of these businesses as an operator. And I think, my criteria for joining a company was I wanted it to be mission driven. And this one sounds broad, but I wanted to be focused on solving a really important problem in financial services. And so that's what took me to Varo. I was excited about the idea of building a bank from scratch, really focused on solving customer problems. When I joined there, I was focused on the lending side of the bank that was then forming, and helping them launch consumer credit products. That experience is really formative. It helped me understand the challenges, the opportunities in lending, really get into kind of the guts of origination, servicing, collections. Actually worked closely with another podcast guest of yours, Rich Weil, who I know you know. After Varo, I decided to join Credit Karma to help lead their personal loans business and specifically engage with many of these lenders around building innovative experiences. And so Credit Karma is a massive platform serving over 100 million users, a large digital acquisition channel. And I was excited about the opportunity to bring to those Credit Karma users, the Credit Karma members, a frictionless, highly certain experience for finding financial products like personal loans. And I think that's what brings me to Plaid here, where I've spent close to the last 2 years at Credit Karma and Varo. And I saw aspects of consumer lending industry that at times focused really heavily on traditional credit data, traditional scores. And I saw an opportunity to scale cash flow underwriting and underwrite on a more holistic picture of the borrower. And I think that this concept and this approach has such tremendous potential. And I think that's really my focus in my work at Plaid.
Question at Credit Karma, did you get involved? I know one of the things those type of platforms bring to the table is, financial education, financial literacy. Did you get involved with that at all? Because I certainly see it as it's still a very big gap in this country as far as really, pushing more financial education to especially the young population as they're in high school and graduating from college. Any thoughts on that front?
Absolutely. And that's really at the core of Credit Karma's mission of championing financial progress for users. They've really done a tremendous job in helping create awareness amongst consumers around their credit score, factors that impact their credit, the ability to, if you're seeing something that looks inaccurate, finding an efficient way to kind of address that and get your score updated. And so I think Credit Karma's done a great job there, and it was exciting to be part of that. I think the second piece is helping consumers understand what credit products they're eligible for.
Right.
So using the platform to understand prior to applying whether you're likely to be approved for a product. So it's really exciting. You can go in there and get a sense for your likelihood of being approved, which is a really valuable thing in saving folks the negative customer experience of being declined.
Well, there's a lot of good solutions out there in the market, right, to help people really break down their scores and understand how they can work hard to improve them. And we are seeing several states, right, that have implemented a requirement to graduate from high school with a financial literacy course. So it's nice to see that we're trying to make some strides there. You're in the role now, Jonathan. You head up the go-to-market lead for Plaid's credit business unit. Maybe talk a little bit about what that means, and maybe before you dive into your side of the business on the credit, maybe talk a little bit about what other verticals Plaid operates besides financial services.
Absolutely. So I serve on the leadership team for our credit business. So that's one of our 4 kind of key business units at Plaid. So we've got a business unit, mine, focused on kind of the credit ecosystem. We've got a payments business unit focused on a number of different payments use cases. We've got an identity verifications business unit. And then we've also got a connectivity business unit really focused on unlocking personal financial management use cases. So that gives you a sense for kind of the different teams. And then there's a whole bunch of horizontal teams supporting these business units. When I think about the work that I do on the credit team, I really think about it in 2 components. One is I oversee strategy and execution for all of our go-to-market efforts. So thinking about how we engage with prospective customers, existing customers, partners, and the broader credit ecosystem in which we operate. The second component is we're also responsible for bringing the voice of the customer back to our product design, engineering teams, ensuring that we've got a roadmap that resonates and supports customer pain points and needs.
Great. Yeah, very helpful. Yeah, let's kind of get down to business, and thanks for sharing some of that personal background. If I reach out to any of our clients and we have some mutual customers, we are partners, I say, what does Plaid do? I know two words I'm going to hear is open banking. And it's not a term that's new. It's been around for a while. But maybe I always like to think about if you were at a cocktail party and you met somebody and said, hey, what is this open banking thing I hear about? How would you describe that to the layperson?
So we think about our business and open banking as really a network that includes three key components. First, you have connectivity into 12,000 financial institutions. Second, you have over 8,000 apps and services that are leveraging that connectivity for various use cases. And third, you've got the actual consumers who are permissioning their data. So we estimate that roughly 1 in 3 Americans with a bank account have leveraged Plaid to link an account. And so what this unlocks is a really exciting set of use cases. And it's really helped to drive innovation across financial services. So you can think of some of these use cases. So consider a personal financial management app that takes kind of disparate financial data across the various accounts that you're engaging with and helps you understand kind of from a 360-degree perspective, how are you positioned? You can think about a bank that's onboarding a new customer. You need to transfer funds from an existing bank account to kind of get up and running. Or you can think about a lender that's leveraging the data to create a more efficient user experience and do things like income verification. So there's a whole host of use cases that kind of innovative institutions are leveraging to drive forward high quality customer experiences.
Well, good. When you were talking about, I think it was Vero and Credit Karma, you talked about joining a mission-driven company. I noticed on the Plaid website, the company's stated mission is to unlock financial freedom for everyone, and further states that Plaid is focused on the democratization of financial services through technology. Pretty bold mission. I think you kind of touched on some of those points, but once again, why is that the mission of the company?
Yeah, I think what's exciting for me is, particularly sitting on our kind of credit business team, the work we're doing is extremely mission aligned with what you just shared there. And maybe taking a step back, unlocking financial freedom is very much the core thesis of Plaid. We believe that people should have control over their finances and have access to an ecosystem of financial products that help them on that journey. On the credit team specifically, we're focused on expanding access to credit and helping deliver more affordable credit by bringing in cash flow data that previously might not have been leveraged or not leveraged or is not being leveraged effectively. And ultimately, we do this through our customers, often lenders, often institutions with lending use cases who are building these innovative credit products to support consumers.
Most of our mutual customers are really in the lending space, right? We have several clients that are using the Plaid platform to help in their underwriting space. So bringing on a loan. Maybe just touch on a little more detail on how those lenders, you see them optimizing the Plaid platform and how they, what do they do with that data when it comes into their shop?
Maybe I can share a bit around kind of the use cases in the progression of the loan life cycle.
Right.
And really, all of these solutions are unlocked via a user linking their account just once during an application process. So the first use case I would call out would be decisioning. So the bank account transaction data balances are effectively a consumer's cash flow statement.
Right.
They tell you about the consumer's income, their expenses, their savings, really critical information for ability to pay underwriting. And so most lenders will use this data alongside traditional credit bureau data to have a complete financial profile, and they're able to assess both willingness to pay and ability to pay. The second use case, kind of again, continuing along kind of the loan life cycle and the origination life cycle, would be income and asset verification. So specifically on the income verification side, we've got a waterfall that includes bank account connectivity, it includes payroll connectivity, and then it includes a fallback to a smart document upload product, which enables folks to upload things like pay stubs, W-2s, bank statements, parse that documentation, and also return a fraud signal. Alongside income verification, we also have identity verification. So we've got a full suite of capabilities there, everything from lining up and ensuring that the identity of the bank account holder lines up with the identity of the applicant, ensuring that applicant information checks out against regulated databases, and then a full suite of anti-fraud solutions. And then lastly, as you kind of think about the tail end of the origination process, obviously an important piece is setting up disbursements and repayments. And so we've got a full set of payments capabilities as well. So everything from your basic ACH setup, processing those payments, managing transaction risk, and accelerating those payments via RTP rails.
One of the questions that comes up a lot is coverage. And I know you mentioned the number of financial institutions that you work with. What would you say your coverage is at Plaid? I mean, are you guys in the high 80s? Any sense of that number? But I mean, I know you talked about the 12,000 financial institutions, but what does that equate to?
The US has one of the most fragmented financial services ecosystems with thousands of financial institutions, banks, credit unions, and increasingly, consumers are also using digital-first neobanks. So what we've been focused on is scaling both coverage and reliability by taking an API approach to building account connectivity. We think about scaling this coverage in a few different ways. First, we have open finance partnerships with the largest institutions in the country. So companies like Capital One, Chase, Wells Fargo, Citi, American Express. Second, we think about supporting the broader ecosystem of institutions, including small banks and credit unions, to facilitate these API-based integrations via partnerships we have with banking platforms such as Fiserv, Jack Henry, Q2, and others. And as many consumers are now signing up with digital-first banks, we've also added connectivity for fintechs like Chime, SoFi, Green Dot, and others. Finally, I just call out that for folks that are unable to connect their institution, we often provide fallback solutions, enabling a complete waterfall approach for customers.
Within that waterfall discussion, one of the questions I was asked once by a client was, is there a way to, once again, thinking about that customer experience, do you offer a solution that allows us to validate whether you actually have the linking to that particular bank that the customer has listed on their application? So if you don't, you automatically put them into a different path so they don't have a bad experience of logging on to Plaid and then finding out Plaid doesn't support ABC Bank.
As we discussed, we're focused on expanding our coverage via API solutions. And so our goal is to ensure connections are reliable at all times. For customers, we provide a dashboard for managing their Plaid integrations. And in this tool, we've been adding new intelligence and analytics to show connection health across institutions and trying to make it easy for customers to see in real time institutions that might be having issues. For consumers, we've added new features to our Link product, which is the user experience where consumers connect their financial accounts via Plaid. We've revamped how we tell consumers what is happening. For example, if the institution they're looking to connect with is having issues. And the goal here is to avoid unnecessary friction for users. So overall, ensuring best-in-class connectivity has been and will always be a huge focus for Plaid.
So, it's interesting. You talked about fraud and identity verification. I read that you guys, back in 2022, you acquired a company called Cognito. As you think about, your future, are there other, obviously you can't list out who they are, but are you constantly looking for, other companies to potentially acquire that kind of fit nicely into your suite?
Yeah, maybe I can talk about kind of the Cognito solution quickly and share kind of what value that's delivered for Plaid. The Cognito platform, which is now Plaid Identity Verification, provides a really comprehensive solution for verifying the identity info, the step-up authentication flows with anti-fraud tooling. And I think that's really exciting in the lending space because identity verification is core to our customers' lending flows and often happens alongside things like income verification, a use case that we've been supporting for years. And this really enables us to do more and more for our customers. And so we like the idea that we've got a breadth of use cases that we can support enabling, our customers to get up and running with a number of different solutions or grow into incremental solutions. At the same time, I don't have any specific feedback for you around where folks are focused on as we think about kind of our priorities. I think we're really excited about the use cases that we're operating in right now. And, I shared some of those, the work we're doing in credit, of course, the work we're doing in payments, the work we're doing to scale identity verification, and, continue kind of our strong presence in supporting personal financial management.
One can't be in the industry and not be hearing about the Rule 1033 and the CFPB, which was released on October 19th. Let me actually kind of just quote it here. So on the 19th of October, the CFPB releases notice of proposed rulemaking for the required rulemaking of a personal finance data rights, which will implement Section 1033 of the Consumer Financial Protection Act. And it goes on to other things. And I know there's right now they're under the phase where they're looking for comment coming back from the industry. I think they published a 299-page document. I actually took a scan of it the other day. And, one of the things that I read was this discussion about whether or not companies in the space will potentially need to become CRAs. And they talk about connectors like yourself, Plaid, that they called it like a dumb pipe, just reaching out to the platforms themselves. But then those that want to go to that next step where they maybe put some meat behind the data. In line with that, your company recently announced that you formed a new entity, Plaid CRA Inc., that will allow it to build innovative credit solutions for both customers and partners. And at the end, this entity will actually operate as a separate division. If you want to, maybe just share more about that company and what your goals and objectives are for Plaid CRA Inc., I think that'd be real interesting.
Yeah, happy to. I think maybe I can start by sharing a little bit around our motivations in kind of this announcement and standing up this CRA entity. The first piece is we focus a lot on being customer centric and listening to customer feedback. And what we hear from our customers is that they want us to go beyond sharing the digital cash flow data that, for many of these customers has been so helpful to them, and provide actual out of the box insights that are ready to use. The value for our customers is this helps them get to market more quickly. This helps them get more value from the solution than perhaps building something in-house. And it reduces the overall investment required to support the solution. So you're getting this data, how much work do you need to do to transform the data into logic that unlocks these use cases? So we think we can add a lot of value there. The second piece is, and related is, this is really a natural evolution of our kind of credit product suite. We've scaled our business dramatically in lending by providing best-in-class coverage, conversion, data, and it felt like the right next step to move into insights and solve more customer problems in a deeper way. So we're really excited about kind of those two pieces. In terms of kind of what that unlocks, our view is having out-of-the-box insights helps us do a couple different things. First, expand to new use cases. And then second, it helps accelerate the adoption of cash flow underwriting in the broader market. So if we think about use cases, of course, we've supported income verification for a long time, but having out-of-the-box insights can be helpful in operationalizing using cash flow data in decisioning. And then as we think about segments of the market that have not been as quick to adopt cash flow underwriting, again, having those out-of-the-box insights will be particularly helpful in getting those folks to market more quickly, helping them get more value from the solution. So that's really how we think about it.
Are you seeing the same utilization rates in consumer lending, in business lending? So I don't know if you get involved with business lending. I would assume you do within your purview. Is the adoption rate in business lending as high on the consumer as the consumer side, or higher maybe?
So we see tremendous adoption from both. In some ways, when we look at some of our earliest customers, it was really a pretty even mix between consumer and particularly small business lending. In small business lending, the credit bureau data availability can be weaker. And it's so critical that you get that cash flow data to assess kind of what that business can support from a debt standpoint. And so some of the small business lenders were some of the earliest adopters of our product. And they see a ton of value in some of the use cases I outlined before, helping leverage that data in making a decision, in understanding what are the right terms, loan amount, et cetera. So we see a ton of adoption in the small business space, small business lending space as well. And we're excited about continuing to kind of support that.
So I think COVID started before you joined Plaid. But maybe you have some statistics that you can help us with here. So we know that during COVID, consumer credit files were definitely impacted by placing trade lines and deferments and forbearance. And then you had a lot of stimulus money, which put more money and an ability for people to both pay off debt and save as well. And a lot of articles about credit score inflation, especially in subprime and near prime consumers. So during COVID, and perhaps more importantly, coming out of the COVID period, it's interesting when we think about signups with Plaid, utilization of Plaid. Did you see really a big increase in the use of your type of offering as a result of COVID? And also as a concern about the credit bureaus and some of the distortion that you might have had from the deferments and the forbearances?
So I'll start by saying I was not at Plaid. I was then at Credit Karma, leading our lender partnerships and personal loans. But I think I have something relevant from my time at Credit Karma, and perhaps we can get back to Plaid. But we saw an interesting thing happen over that time when I was there. And to set context, this was at the onset of COVID. So call it March 2020, if I remember my timing correctly. There was deep uncertainty in the market. Capital markets were not really functioning. So lenders that required loan investors, securitization, were having liquidity challenges. Unemployment, depending on how you define it, was really spiking. And so, and this is publicly reported, lenders were pulling back from acquisition. They wanted to preserve their liquidity, and they were worried about risk in the market that they potentially didn't have visibility into. And so this wasn't ideal for us, for me in my position at Credit Karma, because we were focused on our members, and we wanted to ensure that our members had access to credit offers and that they were eligible for those offers, particularly in a time of need. So I'd have these conversations with lenders, and I'd say, what would help you feel better about the risk here and kind of keep you in the market originating? And consistently, what they would share is cash flow data. And I'd ask why. And they'd say, the environment is shifting so quickly that they really need real-time data. They need to see that the individual, the applicant whose application they're reviewing is still collecting a paycheck and will have the ability to pay for the product. And so, yes, I do think COVID accelerated the adoption of cash flow underwriting and really emphasized the value of kind of having that real-time visibility. And I think that focus kind of persists through today. I mean, you look at the macro environment and it remains highly uncertain. The impact of trends like gas prices or broader inflation on consumers' finances, the impact of student loans and how those payments come back in and what that's doing to a consumer's budget, these trends can be really impactful. And so that's something that cash flow data is a really valuable source for lenders in leveraging.
Yeah, we talked a lot about the student loan impact in my last podcast with TransUnion. It's really interesting. They did a study that looked at, they call it like excess liquidity, by looking at what was the amount of money that people are paying above and beyond their monthly minimums. And it was about $350 a month. And the average student loan debt that just kicked back in October is about $350 a month, right? So it really shows that a lot of those consumers that had federally backed guaranteed student loans are going to be, struggling. And certainly we're seeing, prices are continuing to rise. One of the things that is always interesting, I'm sure you get asked this when you're signing up new clients, and that's, what is the expected take-up rate of people's willingness to log on to Plaid and share their banking data? Prior to joining GDS, I was with Teletrack, which was, one of the first, actually the first payday loan credit bureau. And we dealt with a lot of these short-term lenders where they were actually some of the early ones to adopt the use of banking data. Started out with faxing back bank statements, and then they started using online banking data. they had a way, what's the carrot to get me to want to do that, right? And it was about how quickly I could fund, right? If you're willing to not send your bank statements but log me on, then I can help you get your money more quickly. Do you see that as the same kind of motivator in the space as you think about your clients? Or does it really tend to be driven more by, either the product that's being applied for, where maybe there's a different adoption rate? And also, how does the age of the applicant, certainly my generation, I've told friends, hey, would you ever log onto your bank account to apply for a loan? And they look at me like, are you kidding? I would never do that. Right. But then I'll say to them, do you use any systems like Mint, whatever their new name is? And they say, yeah. I'm like, well, wait a minute. You're giving up more information when you're using those, or, your financial planner, you've linked every single one of your accounts. So it's definitely an age thing, right? As people's are more comfortable growing up in a digital world. So just curious what type of stats you might be able to share with the listeners today.
I think we've seen, again, really strong adoption, really driven by the ubiquitous use of a lot of exciting apps and applications and services. So you think about products offered by folks like Venmo, like SoFi. A lot of folks have gone through that experience. And I think the number of use cases continue to expand, and where folks might see a bank account linking experience is growing to new places. So, you might see it when you're opening a new bank account, investment account, taking out a loan, leasing an apartment. There's a lot of different places I think folks are seeing this and increasingly getting comfortable. As I shared, we estimate that roughly 1 in 3 Americans with bank account have linked an account via Plaid. And so again, that you're thinking we're operating at a relatively large scale, and a lot of folks have engaged with the product. I do think one thing that we see in terms of how folks implement our solution is you can get differentiated performance by being really thoughtful about how you prepare users for that experience. And so that's something we spend a lot of time with our customers on thinking through how to provide kind of contextual guidance for kind of, again, preparing the user to go through that experience and kind of what to expect. And so that is a key component to it. It's really dependent on the use case. And again, where our account management team or implementation team has a number of best practices.
Yeah, that's good feedback. And I've heard clients that have used, various solutions talk about that customer experience. How is that customer interfacing with the solution? And that could cause issues, or it could be a very positive experience. So that's certainly something for our listeners to think about as they're, potentially looking at solutions in the space. So we talked at the beginning of the podcast, the use case around originations, booking loans, but certainly, and when we think about the full credit life cycle, and you talked about income verification and you talked about ID verification, but thinking about that credit life cycle, right? So we start out with originations, but can you talk to how your clients are using that open banking data, or the banking data really, once that account's been booked? Right. So I've booked that $35,000 unsecured loan. What are the other value propositions I have for leveraging the data and the integration that I've done with a company like Plaid?
So I think there's a couple areas where we can support there, and I'll talk through a few examples here. And these examples are ways that our customers can deliver more value to their customers, the borrowers that have taken out products. So like starting with the most basic use case, thinking about saving customers NSF fees by doing balance checks or risk checks around the likelihood that a payment will go through when you're running your kind of monthly payment file. So before you collect that, before you kind of reach out with that request, being able to get a sense for whether the customer has funds in their account. And again, this can add a lot of value for the consumer, because if they don't have money to make that monthly payment, they can incur that NSF fee. So I think that's hugely beneficial for driving NPS. The second piece is if you think about an open-ended credit product, so a credit card, you might be able to deliver additional credit flexibility, additional credit limit if you're seeing positive trends in the bank account, or be able to support customer that's having a challenging time making their payments through thoughtful modifications that really align with their ability to pay. So that's a number of ways where we're engaging with customers around rethinking the servicing process and making it an overall higher quality experience for the borrowers.
Yeah, I mean, there's just such a wealth of information that, you think about someone who has a direct deposit of, call it $10,000 a month, and all of a sudden that drops to zero, right? The first question is, have they gone somewhere else? The second question is, if they haven't gone anywhere else, what's happened, right? Well, I lost my job. Well, wow, you have 3 loans with us. How are we going to work with you, right? In a proactive way instead of a reactive way. So one of the things I've wondered is when people permission themselves through a Plaid, and they bring up and they have multiple accounts with a bank, right? They have their checking, they have their savings, they have maybe investment accounts. Do you find, and is this back to that customer experience you talked about, educating the customer as they're going to go through the process? Do people pretty much just stick with their checking account, or are there lenders that have been successful in getting consumers to not only link, and show the information in their checking account, but maybe their investment accounts with the bank, so they have a more holistic view of their net worth, as an example?
I'd say this really depends on the use case. And there's an element of how you're preparing the user for the experience that's supported by Plaid. So when we think about a lot of the unsecured use cases, what users are often prompted for is to link their primary bank account where they're receiving their direct deposits. And so that's typically going to be a single linking experience. And the lenders in this space are really focused on driving quick, highly efficient origination experiences. And so that's typically what we see. As you scale up loan size and get into secured loans, particularly on the mortgage side, those lenders and those originators are going to be more comprehensive in wanting to understand the complete financial profile. And so that's where they will encourage users to link all of the accounts that kind of represent that complete financial profile. And, when we think about our connectivity, we've got access to not just banking institutions, but also, major investment advisors. And so users are able to link a number of different accounts and ensure that that data is available for lenders as they kind of work through their underwriting process. And so it's kind of a product of those two components of how the lender is preparing the user, as well as the use case that they have in mind.
Well, I'm keeping an eye on the time here, and we're coming towards the end of our podcast today. So let me just maybe throw out one last question, and I'm going to ask you to put on a consulting hat for a few minutes and be maybe a little unbiased. So this has become a pretty crowded market, right? We have Plaid, we have Finicity, we have Yodlee, we have Direct ID, we have Amex. The list goes on and on and on. And we're often asked, well, why should I use one versus the other? So if you are now part of the GDS team and you are providing some consulting to a client that says, I want to use open banking data, what checklist should I create to decide which vendor to use? So maybe I'll let you kind of close with that.
All right. Well, it's exciting to hear I'm on the GDS team in this hypothetical example. No team I'd rather be on. Okay. Going through, there's a lot of things to consider here. So maybe I'll just share a few. I think the first component I would consider is when you go into the process, having a clear sense for the use case you're trying to unlock and saying, can that vendor deliver on the basics of that use case? And in open banking, it's typically, you're thinking about things like coverage, conversion, scale. The second component, I think about is, again, with that same use case in mind, what is kind of the unique or differentiated capabilities that this provider can deliver? Are they offering unique insights? Are they offering things that you're not seeing from other providers? And so that bucket's really around differentiation. And then the third piece I'd consider is this vendor going to become a partner that you can scale with, that you can unlock new use cases with, that you can do innovative things with? And so that's kind of the three buckets I'd look at if I'm the consultant in this example.
Well, good. Well, thanks. Well, it's time to wrap up. This is Rich Alterman, and we've been syncing up with Jonathan Gurwitz, lead for Plaid's credit business unit. I want to thank Jonathan for joining me today and sharing his insights on open banking and how it has already been reshaping the financial services industry. I think Jonathan's given us a lot of things to think about as we think about vendors like Plaid and the various use cases that you can take advantage of across a full credit life cycle. For our listeners, you can learn more about Rule 1033 that we talked about earlier by visiting the CFPB's website at www.consumerfinance.gov. We hope all of you have enjoyed this podcast. Please stay connected with GDS Link and the Lending Link to listen to future podcasts and catch up with ones you've missed. Thank you and make it a great day. Thanks for listening. If you've enjoyed today's episode, please be sure to subscribe on Apple, Spotify, Google, or wherever you listen to your podcasts. And be sure to leave us a review. Follow us on LinkedIn and connect with us on Twitter at GDS Link. That's at GDSLINK. Have a question for the show or have a specific topic you want us to cover? Hit the link in the description to drop us a note. Thank you for lending us part of your day. Make it a great one.